What's the one thing that a bureaucrat that might or might not have been fudging the data for the last few years trying to keep Democrats in power, since 90% of these bureaucrats are Democrats, what's the one weapon they have that can really mess things up? If the only thing they do is release the truth, we're screwed.
You keep saying this recession. Do you think we're in one or that it's inevitable?
No, I don't think so either. I mean, remember, every single member of the business cycle dating committee was appointed by Barack Obama. When you use the words deregulation, that is the one area that you can executive order the tar out of. And Trump did that in his first term, and it can be extremely effective. There's absolutely no doubt about it. But the small businesses have to stop closing.
At our restaurant, we hired a woman named Rebecca. But greatest quote I've ever heard. We had her up in the where all the gear is to get her pick her t-shirt out, and she said, "Okay, the medium fits perfect. I'll take the small." And I thought that was the funniest thing I'd ever heard in my life.
More than 50% of the jobs that have been created in the last 12 months have been government jobs. Private sector's lost 1.4 million full-time positions in the last year. And a lot of those positions have been replaced by AI. Nothing that the government is proposing resolves any of this. We have as many part-time workers in the United States today as we had at the peak in 2010. In 2009, what didn't exist? Uber. In 2021, there were 5 million kind of gig workers total. Today, there are more than 7 million Uber workers alone.
Welcome to The Future's Edge. I am Jim Iuorio. That's Bob Iaccino. And guess what? We have another guest with a vowel on the end of their born name. Danielle DiMartino Booth. It's weird. We always joke about, I know Bobby's wearing white today. Usually we both have black t-shirts on.
Hey.
What's gray?
Hey.
It looks white to me. It looks white that is an old and unwashed. Danielle, how are you?
I'm fine. How are you?
It's the only masculine pink because it's very faded.
Because you say it's masculine?
Most things that I say are masculine are masculine.
Then we would have been worried.
There's no doubt about it. So Danielle DiMartino Booth, you guys have probably all heard of her. She is the CEO, founder of QI Research. She's the author of the book Fed Up, which I love that book, by the way. If I was at my home studio, I have it on my desk and I could show it, but I'm at my downtown studio, so I don't have it on my desk. But it is an excellent book. Before we get going, can you tell them where to find you?
Come on to dmartinobooth.substack.com. I'm actually running a 20% off my annual, which I never do. I'm not a promoter. And I just sounded like a cheesy car salesman. Or follow me at DiMartino Booth on Twitter. That's free. And I still call it Twitter, and so be it.
Good. I do too. Bobby calls it X. I don't know why. I think X is a dumb name. Before we get going, another shout out to our sponsor, Hardcore Italians. The perfect gift for an Italian on your list or even an Italian wannabe is at Hardcore Italians. Please use our promo code, which is, Bobby, tell them.
FU.
FU is our promo code, and you will get 15%. It's finance.
Out of you.
It's a finance unfiltered. It means nothing else besides that. That's what the FU is for.
Well, I'm taking a break from cooking 1,000 meatballs right now, so that's Italian.
When you were kids, did you guys do the homemade ravioli or something like that for the holidays too?
I mean, the meatballs were always a big deal. And the sausage bread and the pepperoni bread. So
yeah,
tomorrow night I'm having 250 of my closest friends over for dinner, and we're going to eat 1,000 meatballs.
Fantastic.
We're related, I'm sure.
My daughter was
Dallas, Texas. If we were back in Connecticut, maybe.
My daughter texted me the other day, and she goes, when they released the name of the shooter, the CEO, this Luigi Mangione, she goes, I felt bad because I was making a pot of sauce and meatballs right at the time Luigi Mangione came on the TV. I felt sad for our people.
That whole thing is so beyond bizarre. It's one of these things where I have to turn off social media because they're like measuring the distance between his two eyebrows, and they're like not the same guy. And I'm like, oh God, somebody calls
start to believe it, right? Yeah.
And when you're with Italians, I mean, it makes a difference, big eyebrows. Anyways, we digress.
No, that's basically what the show's about. Streams of consciousness, right? No,
yeah, it's really difficult with this Luigi Mangione thing. not to get the tinfoil hat out. It really is. Because right away, as an Italian, he's a good-looking kid. He's a smart kid. I mean, it's not above him to kill somebody, but he wouldn't do it like this.
Yeah.
This is stupid. We wouldn't do it that way. But then it's just like I started going in their rabbit hole, and I'm like, okay, stop. I'm going to go read an actual book now.
Right. No doubt. Yeah.
But it's still indicative, of kind of the world we live in, the K-shaped economy where the top of the K is about to topple over the bottom of the K. To listen to Bubble Vision all the time, we're swimming in money. But, the only thing they seem to throw out are averages. Well, when you average in the haves with the have-nots, of course, everything sounds pretty good in the middle, but that's not what the median is. And that's one of my biggest pet peeves with the financial media is they don't distinguish between income cohorts, and they don't appreciate what's going on across America and food banks being overwhelmed, and they don't get it. They don't get it.
This is the biggest pet peeve of mine. What we experienced in the last 4 or 5 years was the biggest gutting of the middle class, the biggest payout to the asset holders. Let's call it the upper 30%. And damn straight, all these economic indicators look great. Retail sales, because people are spending YOLO money. The people who actually have the money, the bottom 70%, is absolutely sucking wind. I'm glad you said it. Now, okay, if you caught me 3 months ago, I was in this camp of we are going to go into a debt spiral. We are totally screwed. Now I'm getting caught up in a level of optimism that I'm thinking you are probably going to talk me out of. Small business optimism had its second biggest 1 month jump in 35 years. By the way, Steve Leisman on CNBC, and he's a nice guy. The CNBC is the TMZ of financial networks. We all know that. But he was like, well, you got to remember that this index is somewhat political. If you switch parties and the Democratic Party started talking about deregulation and having small businesses back, they'd be political towards the Democrats. They're just trying to survive, small business owners. By the way, am I too optimistic right now that we can thread the needle and get out of this problem that we're in?
Can I throw something in, Danielle, before you answer this? In addition to that being a quote unquote political index, if small business optimism is through the roof, the small businesses are going to spend and hire. So what is even the point of saying it's political? Just destroy us on that, would you please?
I go back a long ways with Bill Dunkelberg. I just do. We're old fishing buddies, but the NFIB is, it kind of looks like a chart of University of Michigan Republican consumer sentiment that went hockey sticked right after has the economy changed that much? My go-to for small business is great guy. He runs a website called dailyjobcuts.com. And he is as optimistic as anybody out there right now. And when you use the words deregulation, that is the one area that you can executive order the tar out of. And Trump did that in his first term, and it can be extremely effective. There's absolutely no doubt about it. But the small businesses have to stop closing. And that's kind of what I've looked at since the election. I've tracked dailyjobcuts.com. We're still trending at the absolute highs. This is my question. I'll ask both of you. Will optimism fix household balance sheets?
No, but if these small businesses are really expanding and hiring and doing CapEx, it'll point them in the direction.
And what are they going to hire with? If household balance sheets are impaired, who's going to buy more product to allow them to hire more people?
It's a process. I'll give you that. It's a process that might be long and drawn out. Yeah, no, I'm with you.
I'll give you an actual real world example. Jimmy's a restaurant owner, but very few people know because I don't mention it very much. My brother is a restaurant owner about 30 minutes southwest of Jimmy, right? And he owns sort of a bakery deli. They've been around for 27 years at this point. Him and my father started it out there. He told me two things that got me to believe that there might be something to the business optimism. Pre-election, he told me it was getting easier to hire. Number one. The negative, he says he gave key people raises, and now he just has to give them raises automatically without them asking for fear of losing them. But then the second part of it is he talked about expanding his business, and he talked about the regulations that stop him from expanding his business. Now, to be fair, most of them are state of Illinois regulations, which Trump's going to have no effect on, right? But if there's any way that he can get more money into his pocket, any way at all, he'll expand his business because he currently is struggling to keep up. Now, I don't know if that fixes household balance sheets. I would argue it doesn't. But he also provides a very low price, high volume meal to people. So that may be the niche. I don't know.
Sweet
What do
spot.
both of you guys say about that?
I would say that I really, really, really want your brother to succeed. I really do.
Well, he wants to retire. He has succeed, but go ahead. He doesn't want to do it anymore. But
I mean, what I'm saying is I want everybody's brother to succeed.
Yeah.
I am the biggest small business advocate ever. I think the pandemic put a dagger in the heart of small businesses, and through people of means even more money through the Paycheck Protection Program and the Employee Retention Credit and every other slush fund that was out there. It mostly went to people who already were okay. In a lot of cases, it saved jobs. In a lot of cases, these programs did save companies. But you don't have Mercedes G-Wagons with PPP loan as their custom license plate without raising an eyebrow or two about what a lot of these programs did. But they were not primarily to help small businesses. So I want for small businesses to succeed very, very badly. My greatest area of reticence right now, two things. I don't think that Trump gets macroeconomics 101. If he did, Doge would never have even been a twinkle in his eye unless he was a mature statesman who wanted to galvanize his legacy and do something for the long-term prosperity of the United States. But if Doge succeeds, this recession is going to get uglier. And I mean uglier. Just if Doge succeeds, right? The lowest level of educational attainment for the highest pay in the United States. He wants to fire a bunch of these people. I get it. It's our taxpayer money. In the long run, we'll be better. Think about what the Teachers Union of Chicago did to students during COVID. And now they're a couple years behind students where I am in Texas because of it. Does the Department of Education need to be raised off the planet? Hell yes. So there are wonderful things that are potentially in the works at Doge that could be great for the long-term prosperity of the United States. But they will make this recession deeper. I mean, think about more than 50% of the jobs that have been created in the last 12 months have been government jobs. Private sector's lost, 1.4 million full-time positions in the last year? And a lot of those positions have been replaced by AI, offshored. You had a whole little generation of ninnies saying, I can work from anywhere. Well, I mean, the CEOs finally figured it out. They're like, great, I think Mumbai qualifies as anywhere. So you had a bunch of offshoring of professional positions, and then AI comes along as a kicker. That's nothing that the government is proposing resolves any of this. And on top of it, you have a pretty conventional Congress. Trump is pulling away, which I think is wrong. He's pulling 2 people out of the House of Representatives. Find 2 other warm bodies. At least leave the majority in the House as 3 instead of the 1 that it's going to be. That means that if somebody in the GOP has the stomach flu one day, you've got a tied vote. Or if it's 2 people with the stomach flu, then the Democrats can stop any legislation to approve a lot of these efficiency gains that are the goal. The razor thin majority worries me. And I think Mike Johnson is more capable than any of us thought he would be as Speaker of the House. But, John Thune he's your everyday special interest lobby, plain vanilla, old school politician, and he runs the Senate. So, I'm worried that they're not going to be able to pay for what they want. And that's the bottom line is you got to pay for it. He's like, let's increase the SALT deduction to 20,000 from 10,000. Everybody's in the tri-state area is like, woohoo, here we go. Yay, wonderful. I get it. These sound so good. And just the thought of it, oh God, I get that much more that I don't have to pay Uncle Sam in taxes. Fabulous. It's got to all be paid for. And it's got to be paid for and legislated with razor thin majorities and conventional politicians.
So it sounds to me, what I'm hearing you say is that these would be steps in the right direction, provided they're the baby steps and not try. You can't upset the apple cart too quickly at the beginning because you could disrupt markets, cause a recession, selling begets selling, and all of a sudden we're in a quagmire. What kind of time frame could this work in? If they start If Doge exists, they're starting to look for places to cut spending. They do it casually. They put a freeze on government hiring instead of firing 2 million people, which I thought was idiotic. These people have mortgages and car payments, and the shit could really hit the fan if we do that. Is there a pace they could do it at while at the same time deregulating and trying to fight inflation from a supply side that this whole thing could work out?
I mean, I hope, but you're looking at a window between February of 2025 and when they leave for the winter break to start campaigning for the midterms. That's your window.
Yeah.
That's your window in its entirety, because you have to think of how many, millennials, Gen Zers who are pissed. They want it socialism. They want it progressive. They want everything for free. I'm stereotyping, and I shouldn't be, but there are a lot of people out there who they don't want to work, for lack of a better description, and they'd rather have the government pay their way. That could be, a stump speech for the midterms with, again, this razor thin majority. So with 11 months, do they have enough time? I don't know.
So, Dee, you're talking about fiscal drag, right? If Doge succeeds, you're talking about the fiscal drag on the economy from all those lost jobs to a certain degree. Even if it's unprofitable fiscal drag, it's still a drag, right?
Lost jobs.
Lost jobs. Fair enough. So one of the things I've been talking about on our shows is I think sometime in the second half of next year, we're going to have a 15 to 30% drop in the stock market. I think if we do have it, it's largely based on Doge having some success, right? And then I think that's a multi-decade buy, but you throw sort of a wrench into that for me, and that's the midterms. Because obviously, if we don't have a quick rebound from that 15 to 30% drop that I think is coming based on Doge doing what they said and having some success, it wouldn't be a multi-decade buy if all of a sudden we get a flip of the House and or the Senate, and all of a sudden things just lock up, right? Because then it would just kind of stay in place. So my question is, do you have any confidence in, and I'm talking about the entire private sector, right? Being able to pick that drag up fairly quickly if they get a 15% corporate tax rate and if they don't?
The 15% corporate tax rate would have to come quickly.
Right.
And it would have to be paid for, which would require potentially a different Treasury Secretary than Scott Bessent. Scott Bessent he's very rational. He's thoughtful. He believes that for the long-term growth of the U.S. industrial sector, other countries have shown us we shouldn't leave it completely behind. But he has demonstrated that, rather than use a stick, use a carrot and tell these companies you've got 2 years to reshore back to the United States before we slap tariffs on you. So what's going to pay for the corporate tax cut? And if you're right about the stock market stepping back because, I don't know, price to sales are 40% higher than they were in the year 2000, but valuation's not timing. We know that.
Right.
But if you're talking about a correction in the stock market, there's nothing that makes a C-suite occupant's sphincter get tight more quickly than knowing that his bonus is going to go down, because all he cares about is earnings per share.
We should have a bell. Like the first time someone says sphincter tightening, we should ring the bell on the show, because that is a first. I do have an actual question. Okay, because I am perfectly resigned with our deficits going from 2 trillion to perhaps 3 trillion in 2025 on the backs of these tax cuts. I see a scenario where the globe is, maybe they don't love our 10-year note, our 10-year paper, but they're not backing away from it like it's got the leprosy or something. I think that if they believe we are on the right path and we are moving things in the right direction, that I don't see 10-year yields going above 5%, even if we want a $3 trillion deficit. Am I completely insane?
No, I don't think you're completely insane. I don't think that that's necessarily problematic. The data, it's just the data. You've got continuing claims. They refuse to go back down. 75% of the states have got rising year over year continuing claims. Your median duration of unemployment is 10 and a half weeks. 10 and a half weeks. We first saw that in the Great Recession, I want to say in October 2008, the month after Lehman fell, but we're already there right now. And you're seeing the revenge of the bureaucrats. So when you have stories hit the newswire that says Doge is, by the way, I met with Vivek in Columbus, Ohio at his campaign headquarters before when he was still in the election, he and I sat down, had a long visit. We taped, we talked about reforming the Fed. There was an article in the press that basically drew out what I was describing doing. And that's, why do we have all of these regulators in one financial system when the left hand doesn't know what the right hand is doing? Janet Yellen, president of the San Francisco Fed, is trying to throw IndyMac a lifeline the same day the OCC is closing it down. It's a fair question to ask, why do we have all these banking regulators when we should maybe have one? And talking about defunding the Bureau of Labor Statistics, the Bureau of Economic Analysis, the Department of Labor, talking about defunding them. What's the one thing that a bureaucrat that might or might not have been fudging the data for the last few years, trying to keep Democrats in power, since 90% of these bureaucrats are Democrats, what's the one weapon they have that can really mess, I'm going to use a word that starts with M, mess things up? Because they've already started to show us. They've already given us a little, it's just a 1.2 million job revision. No worries.
So you're talking about the ability to mess and fudge these numbers up, the data, correct?
I'm talking about the ability to just, Jim, if the only thing they do is release the truth, we're screwed.
Yeah.
Because the reason I bring up a median duration of unemployment of 10 and a half weeks in September of 2008, October of 2008, the month after Lehman fell, the reason I bring that up is because if we had the real data in hand, Biden would have been blamed in April, because that's based on the momentum of the negative revisions. It looks like revisions, once the dust finally settles, probably turn negative in April of 2024. They weren't going to tell us that then, but they sure as hell are going to be willing to tell us now.
Hell yeah, they will. And by the way, we've been screaming about that for a lot. Even if the numbers were as they say, there's still way more shit in the labor numbers than there has been before. You mentioned it before, with native-born jobs, full-time jobs, side hustles going through the roof. These are bad labor numbers, which brings up my next question. Jay Powell's easing, despite the fact that there's 2.7 CPI, which, by the way, that when that number printed, the stock market rallied, gold rallied, silver rallied. I think the markets were universally telling us that 2.7 basically is in the range he's willing to accept right now. So if you had to put a finger on why he's easing, is it for the economic reasons that we were talking about, or could it be because he feels somewhere in his brain that lowering borrowing costs, even if he only controls the short end, might help the government get out of their $1.4 trillion debt service problem that they have in 2025? What's the reason?
I don't think he gives a damn about government debt service.
Really? Okay, good. I'd rather he didn't.
Yeah.
So,
he can care less. I do think he is attentive to belatedly the plight of borrowers. The problem is, does it trickle through? Are you going to get really appreciably lower credit card rates? I don't think so. Car rates, or auto loan rates? I don't think so. The bigger problem, Jim, and this is what I've been talking about, is what is the reaction function of the 40% of the stock market owned by people who are 70 years and older? What is their reaction function as the Fed continues to lower interest rates? Because these last few years, they've grown very accustomed to sitting on cash and clipping 5.5%, and they've been really happy about it. So what do they do when it goes to 3.5%?
Yeah, I don't know. What do they do?
Well, they're not going back to work. They went back to work in 2001. They went back to work in 2007 because they were able. They're in their 70s now. They still own 40% of the stock market, but they can't go back to work for another 10 years.
Yeah. Okay.
So they're going to sell what they have.
Yeah. Like they did in 2007, right?
Yeah. Well, but even in 2007, they were in their 60s. We still saw a massive increase in labor force participation among those 55 and older after that happened, because they poured back into labor force. They said, I'll whatever I lost in my 401k, I'll make it up. I'll just work for a few more years.
So Danielle, I have sort of two questions. One is a main question, one is a side question. Can you help square the jobless claims figures? Because I was looking back and during previous recessions, we generally had weekly jobless claims somewhere in the 380 to 420,000 range. I keep hearing about layoffs. Every time a union negotiates a new contract, there's thousands of people laid off like a month later, which I keep telling my union family members, like, you're careful what you wish for. But the second thing is that when I see these numbers, like, I have an explanation for the tech layoffs, which is severances, right? The severances are much more lucrative than the jobless claims. I do have a friend took the severance and took the jobless claims, but I have a bunch of other people who just were like, nah, I got plenty for my severance. I don't want to go through the hassle. What is the explanation of why these numbers are so low? If you agree that the layoffs are bad, I don't know if you agree on that. And the second thing is you keep saying this recession. Do you think we're in one or that it's inevitable?
No, I think it probably will be backdated to around April.
Okay.
I mean,
Fair
remember,
enough.
every single member of the business cycle dating committee was appointed by Barack Obama.
I
You
didn't
really
know
think they're gonna
that.
come out on the campaign trail and, declare a recession? No. No, I don't think so either. But I think that it would
Man.
be backdated. The first time we saw the level of unemployed cross a certain threshold was in October of 2023. The second time we saw this particular threshold breached was April of 2024, and the back revisions are so deep. I mean, can you imagine that the back revisions that we found out through June 30 of 2024, just because we know of how low income was as a result, the BEA told us that they're taking down third quarter 2024 personal income by a cool 91 billion, leaving in its wake 65 billion for the whole quarter. I mean, that's how big these revisions are. They're revising away bigger numbers than what remains. So there's no mystery as to why the food banks have lines around them.
Not at all. Who was the one lady? What was her job? Was she labor secretary when they talked to her about the 900,000 revision? And she was basically like, yeah, that's your opinion. An interviewer was like, no, that's you guys just came out with that. You just
That's your data.
That's your data. God, these people.
Danielle, are you
are
talking
cool.
about the SOM rule in terms of the crossing the threshold or something different?
I'm actually talking about the McKelvey rule, which has never failed. And he was the chief economist at Goldman Sachs. They interviewed him in January of 2008, the Wall Street Journal. I'll never forget it. And being the chief economist at Goldman Sachs, the Wall Street Journal probably asked him the wrong question, which was, well, your rule was triggered in December 2007. Do you think we went into recession? And he was like, well, my rule might be broken. It wasn't. I mean, the recession was backdated to December 2007. So the first time the McKelvey rule was triggered was October of 2023. That's my long story short. But to answer your bigger question, we have as many part-time workers in the United States today as we had at the peak in 2010. In 2009, what didn't exist? Uber. This gets back to your point. That's what's wrong with jobless claims. In the state of Tennessee, Florida, maybe North Carolina, there's 3-4 states where you max out your unemployment benefits after 17 weeks and you get like $250, $300 a week. I mean, people are doing pretty simple math. They're like, or I can go make $750 a week driving for Uber. So, in 2021, there were 5 million kind of gig workers total. Today, there are more than 7 million Uber workers alone. Forget about all the other gigs, the Lyfts, the DoorDashes of the world. So the gig economy has absorbed all of the people who've been laid off because they've done the math. And on top of that, you're also seeing an exhaustion rate. Exhaustion rate is a fancy word for saying you've run out of unemployment benefits.
Right.
You're also seeing an exhaustion rate that we also haven't seen since the Great Recession. And that means that countless Americans are plowing through their typically 26 weeks of unemployment benefits and falling off those rolls. There's no place for them to fall except for the welfare system.
So let's start pointing towards where this goes. Let's look at the bond market first. Okay, so if we're going, and I believe we've been in this weird bifurcated recession for a year as well, too. The top 30% are doing just fine. For the bottom 70%, the recession is at their door without any question. What happens then? Let's say the economy starts to fall apart, and I think it could. Tax receipts plummet, deficits go through the roof. We have to start borrowing more money just to pay for all the shit to not even, mildly Keynesian, bullshit, spend a little bit more. Is the 10-year going to go higher than 5%, 6%? Is nobody going to buy our debt?
That's not typically what happens in recession.
Mm-hmm. So they will buy our debt.
Well, look, we can have a discussion inside of a vacuum cleaner, but it'd be hard to hear us.
Right.
But, the fact that Germany, France, they're in recession, the fact that China is probably in a de facto recession, you cannot ignore the rest of the world around you in terms of how much worse off they are. European banks, they were never forced to clean up their balance sheets after the great financial crisis. They're still sitting on a bunch of dodgy loans. I was going to use a different word. But,
You can do shitty
on
if
this
you
show,
want.
you can. Yes.
Shitty, fuck, piss, whatever.
Whatever you want.
thank you. That was a great demonstration. Yes,
Yeah, sure. Yeah, it's like the George Carlin, the 7 words you can't
I
say.
hear you. Thanks.
Right?
But we have to bear in mind that everything's relative. And if the United States is in recession, the rest of the world's in a hell of a lot more pain than it's in right now.
Right.
And again, you've already got the second and third largest economies in the world, China and Germany, effectively in recession.
For traders and asset holders, what the hell's the difference? We go in a recession, they lower rates to zero, you buy stocks. We go in a booming economy, you buy stocks because the company is doing well. What is the situation that knocks us off besides a market positioning thing, which I frankly don't see yet?
Well, again, the stock market, once recession is recognized, the stock market's never stayed in bed.
Mm-hmm. Okay. So it just
this particular Federal Reserve, Federal Open Market Committee, they seem hell-bent on stopping in the twos. And they seem hell-bent on stopping in the upper 2% range. They're not talking about the zero bound. They've already blueprinted out rolling mortgage-backed securities off of their balance sheet through the end of 2035. Meaning, even if they stop quantitative tightening, which they're planning to do, they haven't told us when, on the Treasury side, they're just going to keep shrinking that balance sheet by letting the mortgage-backed securities roll off. So this particular Fed, May of 2026, anything could change. You know, who gets appointed as the next Fed chair, I don't know. And they could come in and go, boom, we're at the zero bound again. This Fed does not act like it's going to the zero bound.
So where are we being the most, to use the nicest phrase, misled, to use the most accurate one, gaslit? Where are we being misled and gaslit the most in terms of sort of the data or the Fed speak or whatever? Is it inflation? Is it labor? Is it all of it?
I think jobs is definitely where there's been the greatest degree of flat out lying when it comes to that data, because I've got some buddies at a company called Macro Edge. They do a really good job of tracking layoffs. There's no way that they've been running as high as they have. And you hear about, you know, Silicon Valley got wise a year into laying off white collar people, and they decided to introduce performance improvement plans and assist their employees to leave by attrition, so they didn't have to pay them severance anymore. So, but you don't find that out until a company reports their earnings. They're like, oh, you know, we took this charge, or this is what our headcount is now. You're like, where'd all those people go? There was no layoff in it. I think corporate America has been remiss to be honest about how many people they're laying off. It's bad optics. And I certainly think that the formal data on the jobs market is wrong. As far as inflation goes, there's nothing to point to sticky inflation. I mean, somebody show me sticky inflation. The Atlanta Fed wage growth tracker topped out at 7.4%. It's 3.8% now. Last time it was 3.8% going into the Great Recession. We were already in recession once you'd had that delta, and wages just kept coming down to 1.1%. So on top of that, the Cleveland Fed does this fairly decent, I just said Fed and decent in the same sentence. The Cleveland Fed does a fairly decent job of tracking real-time rents. And just from the data that they have, we know that what started with this latest CPI report was shelter finally breaking is going to continue throughout the rest of 2025. And we're going to see year over year shelter go from 5% to 2% in short order. That's a 40%. Hell, it's 46% of the input to core CPI. So there's nothing to suggest to me right now that we might have a few bumps in months for base effects. And then Katie, bar the door, get out the way.
So real quick, 3.8% wage growth. The last I looked, it was annualizing out to about 4%. You're saying it's just going to keep dropping, right? You're not saying that, because this level is not consistent with a recession, but you're saying it's been dropping and there's no end to the downward momentum of wage growth?
I mean, it got to 3.8% in 07, 08. We were in recession.
We're already in a recession.
And again, it certainly wasn't from 7.4%.
So the rent component you just mentioned, I've seen and I've been worried about. So can we talk about real estate, Jim? Do you care if we go into that, into residential and commercial? Because one thing I saw you said is the commercial real estate, again, let me call it gaslighting, is not correct. And I don't want to put words in your mouth. So where are you at on both things?
I mean, look, here's irony, right? You know, Moody's and S&P and Fitch, they were the bad guys because they didn't downgrade subprime mortgages and pools of securities in the aftermath of the financial crisis, they're trumped up in front of Congress and their wrists were slapped and blah, blah, blah. They've been asking regulators, would you please already let us downgrade these commercial mortgage-backed securities? And Moody's came out with a report in defiance of the regulators who were like, shh, extend and pretend. We can't do bank mergers. We can't facilitate bank mergers. They're still sitting on.
Oh my God.
But they came out and told the credit rating agencies, do not downgrade these things. So Moody was like, and they came out a few weeks ago and they said, and here's the double defaults. Here's all these commercial real estate loans that have been extended, pretended, modified, and have re-defaulted.
Wow. I'm drinking water and coffee. I feel like I should have a bourbon after listening.
I'm gonna Friday afternoon. I'm gonna very, very quickly. Okay, so residential real estate. I want you to get, because I did have another question about technology and things, but residential real estate in good areas is exploded. In 10 neighborhoods in Chicago has exploded. Some of the nicer suburbs has exploded as people move out of the shitty areas. Is the residential market fine in your opinion, or is that due for correction as well?
Well, the biggest impairment right now is, so commercial real estate relates to residential in one way. You know how companies have lines of credit and they pull them out when they see a storm over the horizon, they go tap $2 billion credit line just in case.
Yeah.
So a lot of commercial real estate developers did the same thing. So the money that they had tapped, that's almost run dry completely. Credit card charge-offs, TD Bank a few days ago, they came out and they said it's contained.
That old thing.
We didn't mean to have all those charge-offs. You really think it's contained and you really think it's isolated to one bank? No. But banks right now are becoming overwhelmed with trying to modify auto loans, trying to modify credit card loans, and it's being done to a greater degree than they're reporting delinquencies. I'm just talking about great big banks telling somebody who's late on their credit card payment, we're gonna take your interest rate down. We're gonna give you grace. You don't have to pay for a few months. We don't hear about it, but it happens, and it comes out in their bank call sheets. So we're seeing it.
Okay.
And now we're seeing rejection rates for mortgages, rejection rates for auto loans, and rejection rates for credit card loans go through the roof. So the question is, what happens to the Airbnb jocks who bought hundreds of thousands of homes in 20 and especially 2021? That's the vintage with the highest delinquency rate right now in single family residential, by far the 2021 mortgage loan vintage. So, hurricanes, Beryl, Milton, and Helene ripped a shred, right? 100,000 rental homes, investor rental homes, basically 4% of which had flood insurance. So these guys are scrambling right now because it's a Ponzi scheme type of, whoever these people are on TikTok, and you can be a millionaire tomorrow, and you can be a single family home investor, blah, blah, blah. It's all predicated on their being able to continually access finance. That train's pulling out of the station, and that's why we're starting to see inventory in different areas of the country explode right now. If you combine new homes that are on the market, right, your spec homes that are completed on the market to the highest since 2009, builders are choking on inventory. But if you combine new homes that are for sale and existing homes that are for sale, you're well north of 2019 levels. And this is before the Airbnb jocks do the dump.
I don't know what you said that triggered it in my head, but the guys from Schwab, TD Ameritrade Network reached out to me today to see if I could come on their show. By the way, for you guys watching, we're recording on Friday afternoon. They asked me if I could come on OJ's show today, and I said I can't. We're interviewing Danielle DiMartino Booth, and they said to tell her hi. You're coming on there next week. So I just wanted to say that because I didn't want to have them feel like I was forgetting.
Week. Oh, it is the Fed next week. I'm going to.
Oh, which day is the Fed? Wednesday?
18th. What is that?
18th, Wednesday.
Okay, that's what I thought. Yeah.
So do you get any sort of ambient effect or ability to sleep at night based off the fact that the banks don't have as much CRE exposure as they've had in the past, or no?
Wait, what? There's a lot of exposure in your regionals and mid-size. I'm going to borrow a term that you might use. There's a shit ton of exposure. the biggest banks don't have the same exposure that they did.
The regional banks.
Yeah, that's more what I was referring to.
The problem is people talk about banks only having $2 trillion of commercial real estate loans. And I'm like, what about that other trillion in multifamily and construction that's now going bad rapidly? And that's because, you had Party City come out today and they're like, we think we're going to file. That'll be another 700 stores that we're going to close. We filed a year ago. We made an attempt to right the ship. We can't. So there's another liquidation. Container Store is going to file here in the next few days. There's just too much property sitting on valuable dirt.
So do you think
that's why I think that commercial real estate is going to become kind of sector agnostic? It's all going to depend on where is the dirt. Is it underneath a mall that's defunct? Is it underneath a Class A office building that cannot be converted to an apartment because only 1.9% of these buildings have been? As much money as municipalities have thrown at commercial real estate developers to convert them, you can't convert a modern building because it's got only one silo of plumbing going up the middle of it. You can convert the Flatiron building in New York. They're going to do that. It's a pre-war building. You actually can have an apartment with a window. But you can't do that when you try and convert these office buildings. So my argument is, Trump says drill, baby, drill, even as rig counts falling because oil demand's falling. I say dirt, baby, dirt. We're going to be trading for dirt.
So to that point then, something Jim has brought up, and actually quick sidebar, a friend of mine is part of a venture capital fund in the Midwest where they're trying to convert empty office buildings to residential. And one of the examples he gave me is the municipality won't allow it because Oracle owns it and they're paying higher taxes on that building as a corporation than the residential would be. And Oracle just keeps paying it. They can't fill it, so they just keep paying it and they don't want to lose that tax benefit. That was just one anecdotal thing.
Get back to me after that stock market correction. Let me know what Oracle's thinking then.
Yeah, good point. So something Jim has brought up in the past is that Janet Yellen specifically has told regional banks, you're not important, right? You are not critical to the system. And Jim, correct me if I'm wrong on any of this, no. Jim has also said in the past that he believes that the number of banks is going to continue to shrink. Do you think the new Treasury Secretary is going to bail out regionals or just let them shrink and be absorbed by Jamie Dimon and the rest?
Well, I think the incoming president is an advocate for regional and community banks.
Mm-hmm.
He's an advocate for everybody, it seems like. Everyone who comes to them, the longshoremen come to him, he says, yeah, no, I'll stop the technology. You know what I mean? What the hell? Yeah.
Well,
that was kind of asinine.
Yeah.
But I actually think that Doge is an advocate for small and community banks as well. I read something about that a few days ago. So, I watch It's a Wonderful Life over and over and over again. And I'm a big believer in the kind of the fabric of the community and not just having some gigantic bank that's shutting down branches left and right. They come in, they take over, and then they open branches, and then people get used to having them around the corner, and then they close them. And it's just like the effect that, your average Ford dealership in Timbuktu had when it closed. The people in the small towns get really angry and they vote. And I think there's going to be a lot of fighting to keep your local bank open. And I hope to see that.
What are the statistics on that now? I don't have them in front of me. I think like 30 years ago, there was 15,000 total banks. Now there's 5,000 total banks. Is that correct?
I want to say it was almost 40,000 banks, Jim.
Yes, right. So again, it is stark and significant. Yeah.
The number of bank closures has been enormous. This incoming administration is going to be more of an advocate for them.
Okay. So I want to, we mentioned Trump and telling the longshoremen that he's going to fight technology too. And I was thinking, so rewind the tape, and this is going to be about a 30-second question. I'm sorry about that. If you go back to the 70s and 80s, I've often argued you can give Paul Volcker all the credit you want for slashing rates as aggressively as he did, or raising rates aggressively as he did. Reagan for kicking open the global trade. I think what doesn't get the credit it deserves was the advent of the most deflationary technology in history, which was the internet. And that, as it started to take root, I think was a huge thing to bring us into the disinflationary period that lasted for 25 years. Is AI going to be not as important? I know the answer to that is no. Is it going to be significantly important? Because B of A, we were just talking about banks. In their call, they said they were able to fire 1,000 people because they use AI to do their jobs. Big, medium, or little, its effect on disinflation.
So I think AI has tremendous potential to spur layoffs. I also think it has the potential to level the playing field. Here's a great teacher. This guy can teach anybody third grade science. Fine, bring him to everybody. I think that there's a ton of potential, but I do think it will be disinflationary. And I don't know that it's not more powerful. I hope it's not more powerful, because if it is, then we're in Big Brother Central.
Yeah, it upends our life. Yeah.
But I think it's got some good power to be harnessed, I think about the guy at Facebook who invented the like button, and being interviewed years later and him saying, I never thought I would regret creating something that I thought would be an agent of good that is now associated with teenage girls' suicide rates going up. I think we just have to be really careful when it comes to AI, but in the immediate term, disinflationary is the word.
I worry about it. I've read a couple of articles that said that it's not as advanced as people think. And I've read a couple of articles that say it can eliminate 100,000 jobs in the next 3 years per sector, which I don't know how they listed sectors out. I didn't get that far in the article. But when I look at it, there's been
dock workers, right? I mean, think about the advent of the crane.
By the way, I saw
the advent of the crane did to U.S. dock workers. I mean, they were fighting against automation way back when, because it used to take men and hooks and hauls, and they would one at a time. And all of a sudden, you could pick up a whole pallet.
Yeah, for the life of me, I can't think of what the new jobs would be that AI would create, as many technologies in the past have. But I think you just struck on something. Like, I actually have an idea for a business, and one of the components of it is reliable AI. I think there's a small sector of the insurance world that I could do a better job at with the help of AI. It's not small dollar wise, but it's small in terms of people wouldn't necessarily think of it. But I've also found AI wrong more often than you would think. I had an argument with ChatGPT, and when it finally apologized to me, I framed it. I have it framed up here in my office where ChatGPT said, I'm so sorry.
You were joined by the attorney community, where it makes up case law.
Yeah.
Look, if there's one overriding irony, it's how we guide our children in the future, right? We need more doctors in America today. And what did we tell our kids 20 years ago? Just go into computer science. Just
right.
go.
And we don't need that, right?
Now they can go work for the Geek Squad because all of a sudden AI has made them irrelevant, and now we need more doctors.
Yeah, and plumbers and electricians too. You know what I mean? We need more tradesmen.
That's been ongoing. That's been on generations, plural, with sending kids to four-year colleges. That's been going on for a long time. But in the short term, we even told kids to forget about going into investment banking. They're like, just go to Silicon Valley. That's where all the money is.
One of our quotes of the year from 2024 is Luke Groman, when he said that plumbers are going to be making more money than investment bankers in short order. Yeah. So, and I've told this, it's a funny thing. I've told parents that I don't know if I had kids today, if I would send them to college. As a matter of fact, I'm pretty sure I wouldn't. I would offer them their college tuition or money to put them in business, and they could pick.
So I've got 2 college-age kids, and they know that if they decide to deviate from a logical path in their college studies, that they can do all the deviating they want without taking on debt and on their dime.
Yep. We had the same thing. My daughter, who had opportunities to go to school for free to this women in engineering scholarship, and she came and told us that she wanted to study philosophy. And I think she meant psychology, by the way, honestly. And I said, that is fine, and we will support you, but we will not support you financially in any way. But again, I'm in your corner going, rah, rah. She goes, what do you mean? No, I said, you don't give a penny. You study psychology on the internet, study it at home. If you're going to college, be a remunerative degree. Yeah.
So somebody made a really profound statement to me a few days ago, and I really stopped me in my tracks. And that is, what if liberal arts, and I mean robust liberal arts, comes back to the fore because AI makes thinking cookie cutter, and it's going to be the people with imaginations who run the next generation. It's going to be thinkers and creators, and because you won't be able to replicate that type of thinking. And I went, whoa, that's deep.
Yeah, that is pretty damn deep. I think that's interesting. I'm not sure I'm on board yet, but it's definitely worth putting some thought into. Bobby?
Yeah, so my last question for the show, because we're running out of time, is this. So we had Vivek on our show as well when he was still a candidate. And one of the things that we asked him, I don't remember if it was me or Jim, I said, you're talking about eliminating the Department of Education, and I can't find where the president has the power to do that. Please explain to me how you're going to do that. And he had an answer that I'm too stupid to say he was wrong. It sounded great when he said it.
Everything Vivek says sounds great.
Yeah, everything Vivek says sounds like it's true. If you're sitting down with Vivek and Elon, which you have the ability to do, and they said, okay, you are our board of directors, you by yourself. Where do we start? What do we do first? What would you tell them?
Well, Vivek read Fed Up. And so the last chapter of Fed Up, which talks about basically taking the Federal Reserve down to its studs and aggregating into one banking regulator, those are some of the things that I would start to do, because I'm in the world of finance. So that's kind of the view through the prism through which I view the world. But if you noticed in that Wall Street Journal op-ed that they co-authored, they're starting this process with constitutional attorneys. Mm-hmm. That's where they're starting every single step they take. They're starting it with a constitutional attorney to go at it in such a way that when it hits the Supreme Court, it holds. And that's how to construct a new mousetrap. You go first with somebody who has knowledge of the Constitution, knowledge of the law, and you have them create the details that will hold up in front of the Supreme Court.
You know what I love is there's an end date for this sort of off the books governmental agencies. I think that's one of my favorite parts about those.
And we know we'd live in a better country if we had term limits. We know that.
Oh, hell yes, we would. Yeah. Man, Mitch McConnell, let's even start with him. The guy does the blue screen of death on occasion in front of the camera. I feel my heart goes out to the guy. But why in the world are we parading out this guy who's like 150 years old? It makes no sense to me.
It doesn't. And, and think about my personal congressional hero, Pat Toomey. I mean, no matter how many times they were like, no, but Biden wants to appoint this person who is tainted to the Fed. Every time her name came up for a vote, he just picked everybody up from the Senate Financial Committee and walked out because he believed in and adhered to and left. He campaigned on his own term limits. He left when he said he was going to leave. And he was one of the most effective Congress people in the history of the United States.
Big loss.
Because he was able to say no. And that's the thing. I mean, that's all you have to do is be able to say no.
Yeah.
It's a huge advantage to say no. And most people in Congress can't.
Right.
And
well, they even if they said they could, most of them don't have the backbone to stand up for it. Because guess what? They like being rich and powerful.
Of course they do.
And again, and that's why they won't pass any sort of regulation that they can't trade stocks ahead of proprietary information. They like to trade stocks ahead of proprietary information. Every time someone says we should what? They're the ones we give the power to, and they have the power and they abuse it.
I shouldn't say this, but I'd like them to start with the IRS, and that statement is probably going to trigger an audit.
Yeah, don't say that, Ellen, because they're going to think I said it. Next thing I know, they're going to be at my door.
All three of us are going to get an audit, and you guys are going to
we could theoretically, roll out a flat tax and call it a day.
Wouldn't that be lovely?
It'd be so wonderful.
Let's just get rid of the tax code. Let's just have a flat tax.
No doubt about it. And then the three of us can automate the Fed. I actually am not a end the Fed guy. I am a mostly end the Fed guy and take the human element out of it. We could come up with 20 different indicators that would gradually let us increase or decrease low end rates to take the edge off a recession, not to stop a recession. Stopping a recession is an idiotic goal.
Maybe the Federal Reserve does not need to be the banking regulator. Maybe we need a whole new banking regulator. But I think with intellectual theft and the history that we've had with China, that it's probably not the best idea for the tinfoil hat wearers in the middle of the night on my Twitter feed to say that we need to completely end the Fed, given what the Chinese could potentially do to a completely bare and open financial system that's completely unprotected.
I have not heard that take, and I love that take. Bobby, do you have any closing sentiment, or are we done? Play us out.
I'm grateful. I'm grateful.
I'm gonna go wash his T-shirt.
What's that?
I suggest Clorox.
Clorox, get that thing white again.
I'm kidding. It's Dove Gray.
By the way, it should be way smaller too. Just get that thing just so tight on you.
I'm already in a schmedium. I can't go much smaller than a schmedium.
A quick story about tight T-shirts, which Bobby always wears. At our restaurant, we hired a woman named Rebecca, who was a bartender at another restaurant, and she was beautiful and had a fantastic figure. And the greatest quote I've ever heard, we had her up in the where all the gear is to pick her T-shirt out, and she said, "Okay, the medium fits perfect. I'll take the small." And I thought that was the funniest thing I'd ever heard in my life. And she said it. She didn't laugh. She didn't do anything. I was like, that's my girl, right?
That's amazing.
Look, you have to know your client.
Exactly. She's a bartender at an old man bar.
Tell the people
where they can find you, Danielle, before I play us
so
out.
Go to DiMartinoBooth.substack.com. We crank out research every day. And follow me on Twitter if you don't already at DiMartino Booth. Love to have you.
Thank you for coming on. We really appreciate it.
Thank you so much.
Guys for watching. Our shows, both our two podcasts, are getting shit tons of views, and it's amazing to see the support, the DMs, the retweets. We get about 100,000 views a show, and that's growing every day, and it's because of you guys and all your support. We are a 5-star rated on Spotify, by the way, and that's fantastic. Please support our favorite sponsor, Hardcore Italians. They have great stuff. HardcoreItalians.com. Use our promo code FU. Remember Bobby and I's story. Bobby and I were in legacy media for 20, 25 years. We were always at the whim of some overzealous producer or a sponsor who told us what we could and couldn't say. You might think what we say is bullshit now, but at least it's our honest bullshit. And we get great guests because we've been around a long time and we don't burn any bridges, and it's gone good. So remember, our goal is to build a platform outside of legacy media. Bobby wants to concentrate on the platform building. I want to grind legacy media into the dust because that's kind of the grudge I have. But thank you so much for joining us on The Future's Edge.